Let's talk about the market update and market data itself. Take a look at this. This is the median sales price of Santa Clara County of all assets, single family, condo, and townhome. You can see how things have trended. And I spoke about this before. December was the lowest point, and I suspected January figures wouldn't. I thought January figures, to be fair, would probably have been similar to December. But remember this: January are transactions of December, right? I think because usually homes take like 30 days to close. So if it closed, if it got in contract, let's say end of December, it would be a January figure. So these were all transactions during December, which, as you remember, was some of the worst winters that we ever had in history. So there's already some very clear and evident signs of things changing. And this was already in a very bad month. Never mind the transaction that occurred right now in January, which if you're watching, you are probably either on the fence or you've been actively looking at homes. The things are changing. And so why is this? We'll talk about that momentarily. But it is important to note that this has changed. Now, for those that are saying, oh, I don't want to buy at the high, let's look at these numbers again. The top of the price was at 161. And then the lowest was at 130. What does that mean? Let's do some math. That is a decline of 19%. That is a pretty big decline that has occurred during that time. And now you see things starting to reverse. Why are things starting to reverse? We'll talk about that. A lot of it has to do, quite frankly, with interest rates. And it's not just the rate itself, it's the direction of where the rates are going, which is more important actually. Because in my estimate, I would say if rates were 7%, but they were dropping towards 6%, there's going to be more interest in the rate stayed still at 6%, because like the confidence level has changed, right? Because now people are getting into the markets, and this is happening across all assets. We'll talk about the stock market also momentarily too. That's also important. This interest rates impacts everything, right? Impacts all assets, and Bay Area assets are no different. So we'll talk about that, and we'll see so that you can see for yourself, like all assets have been to the upwards and to the positives. Now let's talk a little bit about some other information related to this. You can see sales prices at reverse, and that's a very important indicator. Now, one of the questions I get a lot is like, we're just not seeing many new listings. We're just not seeing much activity. And I would argue it depends. So let's take a look at new listings, the number of new listings. Let's just look at the data side of things. You can see in January, we have 837. Now, December was very dismal, right? 388. But every December is kind of that way. Now, the numbers will increase pretty quickly as we are already into February. So as you can see, the numbers of February do jump up a lot versus January, the previous years. And it will be likely this year the same too. You're going to see a big increase also in March, but really the peak times is really between like February through June or July. That's when you get the most new listings. So for those that are on the fence, are like, I'm not seeing too many homes. On one end, you're going to see a whole lot more right now, which is February. On the other end, if you're still not seeing a ton of homes that would have worked, then it's very important to be honest with yourself and reassess, are you looking in the right areas? Because prices are also moving up now. Prices are also changing. They are going up. And so those are the things that you have to just decide on yourself. Like maybe do you increase the budget because your interest rate is also lower? Do you change the scope? Maybe you buy something a little bit smaller. Do you find a place a little bit further out, right? These are all things that you want to think about and modify so that you can potentially make something work that's realistic. So those are important things when it comes to people saying, oh, I'm just going to keep waiting till summer. No, you don't need to wait till summer. You are already getting into a good time of new listings, right? You can see for yourself. This is like things are starting to pick up pretty quickly. So those are important things to be mindful of. Let's take a look at days to sell medium. I think this is going to be a helpful insight too. So days to sell medium has certainly picked up over the months. So as you can see, the days to sell for medium is now 21 days, which is the highest it has been in a while. Let's pull this back. Let's see how far back, if it was any higher than that previously. So you can see it's higher than what we have in the last couple of years. Let's pull this back even further. The highest since really, there are times in the last 5 years. So you can see the January 2020 was actually worse than what it is today. So what does that mean? What does days to sell medium mean? It just means things have been on the market a little bit longer, but it means that for two reasons. There are many homes, especially now, that are going to be selling within a week because the level of interest and activity has certainly picked up. On the other hand, there are some people that have not adjusted to the market, like sellers. So they're just really fishing for a number. So if they don't hit that number, they'll just wait. And fortunately, it's not that bad of an idea on their case now because the market is rising now versus before. But nevertheless, it may or may not hit that number. So they may just be compelled to wait and see. There isn't much distress that is happening for some of those individuals. And so that's why you will see a very big broad. You're going to see some that are going to sit on the market for a while. And you're like, what's wrong with that house? There's really maybe nothing wrong with the house. They may just be very aggressive in their pricing of what they hope to get. On the other end, you're going to still see things sell every week. So don't be surprised that you're going to see a lot of people into these open houses and you're going to see things go pending within a week. That's why. You're going to see that gap. Now, I suspect that over the months, you're going to see this actually decrease because there is a lot more activity. You don't have to believe me. I just go open houses every week. I just host a bunch of open houses every week. Go for yourself. Go to any open house that's new and measure it yourself. Does it feel crowded and is it crowded? And the answer is you will see it for yourself. And so that's a way to just understand like the level of interest, where are things going, just the trend of things. So those are always very important. The last thing I will bring up, and feel free to leave it in the comments below with what you think. What do you see? Do you see a lot of activity going when you go to open houses again? How does the interest level look like? I'm going to also just pull some other stats for some other areas because people may ask, what is going on in their county? Now, my team covers every county in the Bay Area, so I am familiar with all the counties. So let's take a look at them all. So you can just see most of them have a very similar trend, though, and that's the kind of interesting part about this. Now, San Mateo County, as you can see, on the other hand, not the same results. Make sure I have the same stats for you guys. Yeah, January 22 to January 2023. So San Mateo County, very interesting, right? It's not like Santa Clara County, which actually has rebounded. It has actually still has declined. So very interesting there. Potentially some opportunities that you may be able to have. Now let's take a look at Alameda County. Alameda County, same thing. Kind of interesting, right? It continues to have some declines versus before. Now let's look at Contra Costa County, and we'll wrap up with San Francisco. Contra Costa County has also declined from the previous figures. Really interesting to see. San Francisco, on the other hand, has been relatively flat, as you can see, when it comes to the previous months. So interesting enough, Santa Clara County is the one that has been increasing. And why potentially is that? There's a lot of companies out in that region that have been mandating the return to office. So that may be part of the reason. Another part of the reason may be just it's just those are the areas that people may want to settle down. So we will continue to certainly monitor and see how this progresses. So why have things not continued to drop even during these kind of times? And the reason for that is a big part is related to interest rates. So let's take a look at interest rates. Now, certainly your interest rate may not be this. So you're always going to have to confirm with the lender. Every bank has maybe a little bit different, but it gives you a general sense. You can see the rates have dropped quite a bit from the highs on average, right? The highs was back in November at around 7.1%, 7.08%. Now it's been a full percentage drop and continues to be trending that way. Now, what does this mean then also for the general markets? If you may have noticed or you haven't noticed yourself, in the stock market has certainly done very, very well if you're invested in the market. So a lot of people don't really see this because you wouldn't hear this. All you would hear is the world is ending, everybody's laying off, everything is going down. But look at what has happened since that time. Right? If you were to measure from the same time of when interest rates started to change, the market has been up 10% since then, right? And so it's just mindful and important for people to realize, like, if things are dropping like this when it comes to rates, just because the Fed has increased the Fed fund rate doesn't mean that these interest rates are going to be impacted, because these are also more of a predictor of how the sentiment feels of what the Fed will likely do. And the fact that they only increased by a quarter shows some confidence that, hey, look, maybe we're getting very close to the end. And for a lot of people that know about the stock market, typically the stock market tends to be a little bit more of a forward-thinking indicator. Generally, people say it's about 6 months indicator, because look at this. The declines previously was in maybe like November of 2021, and that's when it declined by 21% since June. And then as you can see with the real estate market really was impacted around the April, May timeframe. So if this is the case, this is some really interesting signs. Now, I'm not saying it's going to be a guarantee that we're going to have a roaring change, but it is kind of interesting of what these players are doing and what investors are doing.